What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is August 12th of 2019. Well, folks, I hope you all are having a fantastic day wherever you are, and in today's video, I want to spend some time to talk about how a bad mixture of both monetary policy as well as physical policy over the last decade since the global financial crisis has fueled yet again another set of bubbles and symptoms that are going to come to roost here in the next few months and year. So we've got lots of interesting macro factors to talk about today, and along with that as well, towards the end of the video, if you guys are interested, I really recommend you stick around and check out the BitPanda review that I did. It's a cryptocurrency exchange that I recommend you guys check out. So anyways, we've got lots of things to discuss. Let's go ahead and dive right into it. So over the last 24 hours, we can see most cryptocurrencies are in a no trend scenario between 1 to 2% to the upside or downside here. And we can see here as well in the sense of global markets that we're still, again, trying to press towards getting that high that can get above the line of resistance, both on overall market cap and Bitcoin. We've been relatively stagnant here over the last few days. I think we've been holding a lot of the gains we saw in the market as a hedge against the Chinese yuan devaluation, a lot of the factors that have actually probably provided some liquidity into the space, or at least an increase in valuation price. Now, another thing to note as well is that Bitcoin dominance as well, the trend has started to slow down. We've seen altcoins start to gain over the last few days. A lot of this has come through in not only some of our top 10 picks that we've looked at, but a lot of the Binance Launchpad plays. And this is obviously due to the fact that Coinbase recently announced, now that they have their securities license, they're going to be able to launch a lot of these different tokens and stuff on the platform. But they're doing it slowly and steadily. I'd like to know what you guys think about this. I'm not too excited about a lot of them. There's some that have some interesting promise. Some of them I think they're just fluff, and I think it's basically Coinbase trying to get some exposure of that Binance market now that they're closed off to the US, at least for now, at the time being. So anyways, let's go ahead here. Take a look at the market. As I told you all, I'm not overcomplicating the chart here. As per usual, I'm looking at support and resistance. We still have the two highs here, the last two highs that Bitcoin set that are actually significant, still weighing down price here. Again, very simple TA, guys, nothing too complex. But if you kept an eye on this and saw that for multiple days, we were getting resisted here. I was hoping we'd get a breakout. But the moment we started to turn here, it's a pretty clear sign that we're not moving just yet. We need to get a confirmation above the line. And in this case, if we can get a close above 12,000, I will consider that a breakout above this, and that we're going to start continuing to pick up the same kind of momentum we saw here with even more volume. Now, in the sense of the possibility that we can't get above here, the next target range would be down here in the low 9,000 range. And if we get down there, I'd be happy to average in. Again, right now I'm trying to build a cash position. For whatever you guys are planning, just letting you know that's my strategy. You got to determine it for yourself. And this is really kind of the chart that I'm keeping an eye on here. Even if you have some altcoins that you like, again, I would wait until, if it starts to look like we break below the the 21 and 50 day moving averages, then in that case, I'm going to wait to average into altcoins as well until we come down here, because it's likely, as we've seen over the last few months, if Bitcoin is going up, altcoins are having a hard time keeping up. And then also, if Bitcoin's going down, altcoins are likely going to follow. It's very rare that the case is on the contrary. So taking a look here across the board on the market, you can see exactly what I'm talking about. Most altcoins right now are currently down. Again, the only things up really over the last 7 days, Matic, as well as I think Harmony and Algorand, again, the Binance IEOs that are going to get listed on Coinbase. And then also here's Binance Coin, which has actually had a little bit of an uptrend after a pretty stark sell-off. All right, so I want to go ahead and spend some time to talk about today's macro topic, and that is really taking a lot of topics that we've talked about before, as well as some new ones, and kind of bundling it into a perspective that's digestible and something that you guys can use in the sense of your research for your trading and everything. Now, again, I don't want to give you guys financial advice, but I want to share with you in this video what my perspective is and how I take all of this information and I turn it into something that's actionable for me personally. As a macro trader, I want to know where I can park my capital, where I can maintain my value, as well as hopefully gain value over time. That's the key objective there. So let's go ahead and start with the precursor here. As we take a look here at the futures right now, we're a little bit earlier before the markets launch in about an hour. S&P 500 down 0.5%. And it looks like the S&P 500, as well as most major indices, are having a dead cat bounce and roll over yet again here for lower lows in this case. And we can see it's not just in the S&P 500, it's also in the NASDAQ, which is down over a percentage point. But the crazy thing is that U.S. markets actually look quite nice compared to other markets. Asia markets are taking a huge hit. Hang Seng, Hong Kong index, down almost 2.5%. Now, you've obviously got some of the protests going on in Hong Kong, but I think we can see here, for example, from the Nikkei, which is a major Japanese index, and the Singapore index, down anywhere from 1 to 1.5%. This is a broader fear growing across the board on the markets. And I think it speaks to something much deeper. So what are the fundamentals that are possibly coming to roost here that are causing this kind of panic in markets? Well, we'll go ahead and talk about really two of them today that's going to lead towards a huge global shift in liquidity. The first one we've talked about before is the negative yielding bond crisis. Now, we have ballooned an entire market that just about a decade ago no one would have thought was possible. You didn't have to be a contrarian to think it was a silly idea. Over $15 trillion of treasury notes, as well as other forms of private debt, are now, as owners of that debt, having to pay out to borrow capital. Think about that for a second, just how much of a Twilight Zone kind of concept that is. So this whole market of negative yielding bonds has continued to grow. And the only reason it's been able to sustain itself is because they're packaging this stuff into your pension fund, into the retirement portfolios of people across the world. A few traders might buy this, not enough to support $15 trillion of buying activity. And what it's doing, the way that we're paying for it, is that we're subsidizing from the gains that people are making in other sections of their portfolio, from their stock portfolio, things of that sort. And it's absolutely insane. I mean, we've just seen in less than a year, we've gone from an average of around $6 trillion in negative yielding bonds all the way up to a global number of over 15 trillion. And I think we're well on our way to 20 trillion by the end of the year at a minimum, somewhere between 20 and 25 trillion, with the rate that this is increasing here. Now, this is coming due to really two things. Obviously, governments are always packing on new debt in this case, so they issue new treasuries. But along with that, to not only surface these budgets, they're also, in this case, taking on lower interest rates to their monetary policy. And this is yet again leading on towards treasuries time and time again seeing a lower yields. So we just saw, for example, I got to say NBC did a really good job kind of bringing this up here. The Reserve Bank of New Zealand, as an example, one of our great countries, the Kiwis, aggressively cut its benchmark rate by 50 basis points to 1%. So back down almost towards 0%. The market was only expecting a 25 basis point cut. It's easily within the realms of possibility that we might have to use negative interest rates, the New Zealand governor said. So when you're pushing the base Fed funds rate in this case, or the equivalent in other central banks, down towards 0% or negative territory, your yields are going to drop in a very similar way. This means that people who are taking on your debt are going to have to finance that debt, in that case, to own that debt note. It doesn't make much sense, but it's happening. In Germany, the 30-year government bond went negative for the first time ever last week. The media is not really talking about it. I mean, you're you're getting a little bit of talk in finance news on this, but I mean, this is a severe issue. It's one of the most interesting experiments in monetary policy, as well as in broader finance and economics. It's completely contrarian to anything that we've seen before. Now, this is one of the things that I want to talk about, because when it comes to this $15 trillion treasury market, people are purchasing this debt. And a lot of this market value, in this case, the underlying value of the treasuries, this $15 trillion, is going to evaporate. And the capital that is going to exit out of it is going to have to go into hedges. Something's going to happen here. And it's going to be pretty stark when it does happen, when the domino gets too big and it falls over. So we have this to keep in mind. This is one of our big factors. The other factor that I'd like to talk about is what we saw in China this past week. And I want to make clear, it's not just a China phenomenon. I mean, China is a predominant devaluer. Devaluer, I don't know if I'm using proper English. They basically love to devalue their own currency. They've been known to do it for the last few decades. It's very common. But it's not just a problem with China. This is a problem with the broader market across the world. There has been a huge shock in dollar liquidity as the dollar has continued to gain strength. And as we've seen, for example, from the new tax laws in the United States that have left huge repatriation of US dollars back to the US, there has been a huge shock of global liquidity because so many countries have either had weakening monetary policy compared to the United States, or in this case, that they haven't been able to service their dollar-denominated debt. We've talked about this. This is what led to the currency crisis in Turkey, and it's what's led to a lot of currency crises across the world, and is going to lead to even more. And it really depends on where the dollar denomination exposure is. Those are some of your candidates you need to watch for. And there's plenty of data online where you can look that kind of gives you some good perspective. A lot of South American countries, countries like Turkey as well, that have overexposure. They borrow too much credit denominated in dollars, and their currency is weakened. And this is going to lead towards a huge currency crisis in this case across the board. I think it's going to be the second one, and predominantly I think it's going to be a lot in Asia in this case. That's where you have a lot of different currencies across the world. And if we start to see a shock and recession in China and start to see again continued strength of the dollar, this is going to squeeze currencies across the world. It's going to lead people to flight towards other means of storing their value, whether that's other fiat currencies or hedges. Now this is getting us into what we want to talk about here. What really, at the end of the day, is going to see the benefit of these brewing problems right now? It's a very unique mixture and cocktail of issues that are going on. And we didn't even talk about all of them. I mean, you got the trade war, you've got Brexit, you've got the protests, as I mentioned, in Hong Kong. You've got so many things to be worried about that are starting to kind of materialize all at once. Well, I'd say that there's really three things that are going to do well. You might possibly want to see it as four things: U.S. markets and the U.S. dollar, and then Bitcoin and gold. Toss in silver there as well, maybe. The reason I say that is because right now, the U.S., with its financial markets, not the underlying economy, not defending it. You guys probably know more than anything. I rag on the U.S. a lot when it comes to the underlying fundamentals. Not very good. It hasn't been good for a long time. But when we take a look at equity markets and currency strength, the dollar in U.S. markets, from the S&P 500 to the NASDAQ, are looking spectacular comparative to other players. Don't believe me? Let's go ahead and take a look at the charts. For example, the Hang Seng we were just talking about earlier. Hong Kong markets down massively from their all-time highs. They visited nowhere near their all-time highs. While we were setting all-time highs this year, Hong Kong has been seeing huge declines, almost pretty much what many would consider recession territory. And they've been in it for a while. Let's take Chinese markets. Want to talk about who's winning the trade war here? Shanghai Composite sure as hell doesn't show it. Sorry for the language, but it's the truth. This to me looks like recession territory. If U.S. markets were moving like this, people would consider recession territory, right? We have not set any new highs here ever since the bubble back in 2015. And every single time, as it looks like we're recovering, we set lower highs. Take a look at the Nikkei here. The Japanese stock market, which has been propped up by its central bank, where its central bank is a major shareholder in all of its companies, top 10 shareholder in every one of its companies, owns 80% of its ETFs, can't even set new highs. And not to mention, if we take a look here, since the bubble back during the 80s, we haven't even been able to set new highs, as the Japanese yen has lost its value en masse, just like every other fiat currency across the world. It doesn't make much sense to me. But again, I mean, I can understand maybe how we may not outpace this bubble in the past. It was pretty severe if you watch the Princess at the end. But again, to me, even in the short term, this just looks absolutely weak. It shows me that capital's flowing out. Again, that's the thing to keep in mind, guys, is that capital can flow in and out. It can go into other markets across the world. It can go into other currencies. And that's what I want to talk about here. The fact that we not only expect, at least I personally do, that a lot of the global liquidity is going to flow into U.S. markets, but also into U.S. dollars. If we take a look at the Dixie dollar index, over the last few weeks and stuff, the past week or so, we've had a pretty big drop here in the dollar index. But in the longer term trend, we're going up and we're picking pace. So when we break above 100 very big even level in the Dixie, I think we're going to see a very big breakout in a very short period of time. And again, it's not that I think the dollar is much greater than other fiat currencies, and there is a lot of nails that are starting to come into the coffin for, the dollar as the world reserve currency. But I do believe right now it still holds the strength compared to other currencies across the world. It is going to lead towards this squeeze because there's a demand to get in equity markets. There's a demand for capital to flood to U.S. markets. And right now, the situation in the U.S. looks a lot better than in most countries right now. In the case of interest rates, we're able to maintain interest rates at around the 2.5% range. Even if we cut rates, we're going to be cutting at the same pace that most central banks are, as we just heard about New Zealand in that article. We're very fine and very accepting of the idea that we might need negative interest rates. That's not something we're talking about in the United States. We will eventually. Oh, we will. Don't worry. I'm not as egotistical to think that we're not going to come down the same boat that every central bank is, because we're all playing the same game. We're just at different phases, and the central bank kind of scheme in a sense that eventually we're going to falter to the same exact final domino that's going to crash our system as well. It's all the same game. Interest rates. You really think about it, we're all just using different currencies with different labels and countries of origin. That's really the only difference. And again, we're in different cycles of the inevitable end of our fiat currencies, right? So now we've talked about the things that you guys probably don't really care about. You probably don't care much about stocks or the dollar in this case. You might already hold a plentiful amount of dollars. But this is where we have hedges like Bitcoin coming in, and why we've seen such a big squeeze here, why we're pressing up against resistance in this case. Again, the major thing to take into mind is that with Bitcoin, we have an ultimate hedge here. I saw a really good chart the other day, and I'm also going to talk about gold. Gold is the other option here. But in the case of Bitcoin, when we talk about the emissions, I know I've talked about kind of the limited nature of gold as well as Bitcoin, but Bitcoin is finite in nature. And there's a great chart that showcases the absolute rate of inflation that we've had in gold over the last really century in this case. We have a huge amount of economic data to look back on to see how the supply has ballooned over time. And to think just how great gold has acted as a hedge, in this case against fiat currency crises, even with a growing supply. What's going to happen when Bitcoin reaches 19, 20 million and pretty much is almost capped out towards its 21 million coin limit over the next few years? How is that going to act as a hedge? I think it's going to act great. And again, as I talked about, I think gold will do well. I think gold and silver have already proven that. The kind of momentum that they're showcasing is huge. But I'm going to make sure to have a good range of all those assets. I'm going to make sure I'm also not way too overexposed into hedging assets, that I've got some dollars so I can possibly pick up equities. If I need to go back into gold and crypto, I can. But again, trying to get a good approach to a variety of different assets across the board. Don't try to spread yourself too thin, but also at the same time, get some exposure. Get some exposure. Try a few different things. And go to where you feel the negative yielding bonds as well as the weakening currencies are going to flow to. To me, when it comes to weakening currencies, I think, they're going to go to the strongest currency. That's probably the dollar in this case. When I think about assets like this that are negative yielding, I think about the fact that people are going to want something that may not yield them something, but at least isn't losing money. And that is Bitcoin in this case. I believe it's going to be an emerging financial asset as well as gold and silver. And once we get entry vehicles like an ETF, you can assume Bitcoin is going to rocket past 20,000 and set out towards all-time highs. That's at least my opinion on it. Anyways, that's it for the video today. Let's go ahead and dive into the BitPanda review. Alrighty everyone, so let's go ahead and spend some time to dive into today's sponsor, and it is no other than BitPanda.com. Now, for those of you who are hearing about BitPanda for the first time, I want to go ahead and provide a quick summary before we dive into the details behind the company. Now, to put it simple, BitPanda is predominantly a cryptocurrency exchange. It's a digital asset hub that allows you to get exposure to a wide range of cryptos as well as other types of assets such as gold that most cryptocurrency exchanges don't offer. It's also based in Vienna, Austria, and regulated by the local finance authority. So to put that in simple simple terms, they are at a top tier level of regulatory compliance and is also one of the most predominant exchanges in European markets. The name might be familiar to a lot of you based in European countries. However, you don't have to be based in Europe to trade on BitPanda. They've just recently gone global and are accessible to a variety of countries across the world. Now, this allows anyone to pretty much buy, swap, or send cryptocurrencies how they like on the BitPanda platform. And they've already got over 1 million users and 120 staff members across the world. So you can see we've already got some accolades to champion here in the sense of an exchange. Not to mention, BitPanda has been around against a lot of the competitors for a very long period of time. So I want to go ahead and dive a little bit deeper. Now that we've gotten this understanding of what BitPanda is, some of the major features that it offers, I want to see why it really stands out. So there's 4 kind of key points here that they make clear on why BitPanda stands out. The fact that it's easy and convenient, the exchange layout, which we'll take a look at in just a little bit, is really clean from what I can see. Doesn't overcomplicate things. It's much more built for, I would say, kind of a retail intermediate audience for those who are trading. Along with that as well, it's secure in this case. They're using state-of-the-art cold storage technology in order to store funds. We also have as well the fact that it's fast and reliable, available 24/7, and then also the fact that they've got multiple payment gateways in order to deposit crypto or deposit fiat currencies in order to buy cryptocurrencies. So you can see that they've already got things like Visa and MasterCard, but they've got so many other options here that predominantly aren't accessible on most exchanges. So now that we kind of understand some of the benefits of it, I think it's important we understand kind of the philosophy. Well, you have to look no further than the founders in this case. So we have Eric DeMuth as well as Paul, and also an individual named Christian, who's the CTO. The CEO position is shared between these two, but the whole vision behind BitPanda has been really around getting accessibility for financial assets and more predominantly digital assets over the last few years and making it as easy as possible. And I think most of us in this space kind of agree with that kind of line of thought and that train of thought. But the problem is it's very difficult to do that in a regulatory compliant manner and to make sure that you're not overstepping in that case, making sure you're doing things the right way, and also making as well where it's not a burden for people, the solutions that you bring. So there's some really cool information. I'll leave a video down below to listen to a really good speech from Eric, one of the CEOs of the company. But I want to go ahead and talk about some of the things that really kind of stand out to me. So as far back as 2016, again, guys, it's crazy. I think most of us weren't in the space in 2016, or at least as active as we are. They got the ability to basically deposit directly from MasterCard and Visa. Again, something that at the time was pretty big, especially I would say in European markets, to be able to make deposits like that. But again, there's a variety of other options that allow you to deposit money into the exchange. The fact that they've also got a really nice Android app in this case. Now, iOS is supposed to be coming quite soon. We don't have an official date on it as of yet, but the layout for it is extremely clean. It allows you to get the same functionality that you get on the desktop client in this case, or the website client in this case on desktop, that allows you to buy and sell cryptocurrency. So from anywhere in the world, you'll be able to access your portfolio, which again, I really like. And then also they've got something called BitPanda Swap. So as we mentioned, you can swap these currencies and not do, kind of the complexities of trade. If you really just, for example, wanted to maybe swap Bitcoin to maybe stable coins, or maybe Bitcoin to Ethereum, or some kind of altcoin that you liked on the exchange, you can do it in a matter of seconds. And again, the layout for it is really clean. There's a good little graphic here that kind of shows it. It's very similar to most swap applications, but it's nice to see that an exchange, one of the centralized exchanges in this case, actually has this. I think that's a really good functionality. Just makes it very convenient, lets you get access to the order book instantly. And it's also important to mention as well that as of recent, they've gotten a PSD2 license, which is a second payment services directive license. To put that simple, it means that they're going through the compliant route, guys. They're actually going to be able to offer a wide range of financial services on their platform. This is a new form of licensing in European markets that's going to allow users on the BitPanda platform to access not only digital assets, but also things such as gold. And as we can see here, there's a lot of interesting functionality. We not only have those kind of wide range of assets, as we'll talk about later, that they're trying to expand to, but they've also got BitPanda Savings. This is a really cool feature that I like. I've always tried to see crypto exchanges make people get more engaged in crypto, not only building hopefully more allocations in crypto, but just kind of automating the process and making it seem like it's a routine. And that's exactly what BitPanda Savings is. It allows users in this case to be able to continuously add in to their crypto position in this case. and basically save for the future. We can also see here as well now that you have access to gold and silver markets. So instead of having to buy paper ETFs on maybe say Robinhood or some kind of brokerage platform, you can buy exposure to gold and silver right from your cryptocurrency exchange, in this case on BitPanda. So it's very, very exciting to see that they're again expanding into these hedges, as I personally like to keep a little bit diversified. And I'm also very positive on gold and silver going into the next year. Now we can also see here as well that BitPanda has decided to go global. And this is where it becomes very relevant for a lot of you out there. So Canada, a lot of other regions, you can actually look towards BitPanda now. It's a very exciting time for the company that's been around for a long time. And they're going to go about expanding into the global audience in this case and trying to get as many users as possible. So again, give it a try if you guys are not in a region that was previously available for BitPanda. If you now are in one of those countries that they allow as they've gone global, check them out, give them a try, see the user interface, and we're going to spend some time here now to go ahead and take a look at the actual exchange itself. We've got a demo video to dive through, and we're going to see what the user interface looks like, what it's like actually being a participant on the exchange. So let's go ahead and dive right into it. Now from the get-go, we can see that BitPanda's user experience is really clean. It not only keeps things minimalistic, but provides us all the functionality and data that we need, from price action to volume metrics on the given cryptocurrencies we're trading. Now to start off with any demo of a given exchange, we're obviously going to need some funds deposited into our account. And we're going to go ahead in this demo video and see just how easy it is to deposit from your wallet on BitPanda into your trading account. In this case, we'll be using USD Tether, a very common stablecoin in the cryptocurrency space, in order to buy some Bitcoin. And just like that, we've got our Tether in our account and we are ready to start trading. Now, we're going to go ahead and try to do two different types of orders on the market. We're not only going to do a market order, which is going to extract liquidity from the order book. Basically, it'll be able to instantly settle our transaction from our USD Tether to Bitcoin. And all we simply have to do is have our funds in our account, which we've already got. And we can go ahead and click the Buy BTC button and buy Bitcoin right off the market. And just like that, we now own one whole Bitcoin. Now, that's not the only way you have to trade. You can, for example, wait for a lower price by setting a limit order at a lower range on the order book. So, for example, maybe we want to wait for Bitcoin to go to 11,700 instead of 11,732, which we're currently at, and we could place an order for that. Or we could go about, placing, for example, a higher level for our sell order, in this case, using limit orders. So there's different ways you can use these type of orders on the given exchange rather than just market orders. Now, the next thing we want to take a look at is our balances page. This is where you'll see your current holdings, not only on the portfolio size, but the actual value of what you hold in the sense of euros as well as Bitcoin. We can also click on the trade button next to any given cryptocurrency to see what pairs the exchange offer for us to trade against in that given currency. Next as well, in the overall profile view, we can see that there's transactions. Now in this transactions tab, we can see all of the previous transactions we've done. We see, for example, the transaction of Tether that we had into our exchange account on BitPanda. And next after that as well, we can see our different fee levels. Now this is very important with any given exchange. And I have to say, from the overall view of the maker and taker fees, this is a very competitive set of rates comparative to most exchanges. So taking a look here back of the chart here again, we have the market tab in the top left that's going to allow us to switch from different cryptocurrencies on the exchange. And from there we can go from Bitcoin to altcoin pairs and now start to see not only different price but also volume ranges for different cryptocurrencies and different pairs where we can trade. So that's just a quick demo to get your feet wet into what BitPanda has to offer. But if you want to learn more, check out the link down below in the description to see what BitPanda is all about and consider registering for an account today. So to put it in summary, I have to say that I've been impressed by what I've read about BitPanda so far. It's not only had a long-term track record compared to most cryptocurrency exchanges, but it's shown its track record as a positive one through its management of user funds over the last few years, as well as continuing to be compliant with regulators in European markets. I'd really even go as far to say that it's on the top tier ranks of Coinbase and Kraken, some of the exchanges that I really admire. And this is something that I really want to make clear as well. It's one thing for a cryptocurrency exchange to maybe, for example, provide a clean user experience, or maybe add an interesting functionality like being able to invest in other financial markets like gold and silver, or maybe be able to offer really simple swapping functionality. But the cool thing about BitPanda is that it combines all of these. You can see the ambition in the company. As it is meeting regulatory concerns, it is still trying to push the barriers and provide as much financial freedom to users across the world as it's continued to expand globally. So with that being said, guys, thank you all so much for watching. I hope you all enjoyed this review, and be sure to check out the links down below in the description if you're interested in checking out BitPanda. That being said, thank you all so much for watching, and I'll see you all in the next video. Stay tuned.